of strife and upheaval, but I'm certain, honey, that life would be sunny.
Good morning. You are tuned into the Art of Investing. I'm your host, Art Espinoza. Welcome back, and thank you for spending a portion of your precious time with me this weekend. It is very much appreciated. Yes, indeed. It was quite the week on Wall Street. Let's see. You had to deal with China wondering what in the world would they do next. All of a sudden, I know many of you, like myself, were watching the news before you went to bed to see how the Asian markets would open, just to get a glimpse as to what might happen here the next morning. My advice to you, stick with the warm glass of milk to help get you to sleep. Then you had commodities. They were continuing their downward ways, namely oil, which affects the entire world. That's a very unique quality when you deal with commodities. There's no place to hide. There's every sector you can think of to invest in. Commodities will have something to say. If only indirectly, they will make their presence felt. And if that wasn't enough, you have to deal with when, and now if, the Fed is going to raise interest rates. All this wreaking havoc on the markets. Well, anyway, before we deal with all that, let's see how wild things actually were in the markets in the week just passed. You had the Dow Jones Industrial Average actually finishing up for the week. That's right, I said up. It was actually down at one point, 1,000, but it actually ended the week up 184 points, still far below the 18,000 mark that it set a few months ago, and closed at 16,643. So there's a lot of work to be done, but yes, through it all, it finished in the black. So did the S&P 500. It saw a gain of 18 to close at 1988. The NASDAQ, and you know all the technology stocks that comprise of that index, finished 122 points higher in the week, but it also fell below and stood below its psychological 5,000 mark at 48.28. The Dow Jones Transportation Average barely eked out a gain of 36 points at, 79.08. Remember, not too long ago, just a few months ago, that index began to break down at 9,200, and here we are at 79.08. Yes, there are some things going on within the transportation average that's telling us something, but more about that at another show. And as I've taught you on this show, that when equities perform positively, like they did last week, that happens because monies flow out of safe haven type of investments like we saw this week in both the Dow Jones Utility Average and the 10-year Treasury notes, both closing lower. The 10-year note at 2.18%. Specifically. Well, that's your week in review, and as always, brought to you by our very good friends at Minuteman Press. Give them a call at 772-567-4645. That's 772-567-4645, or visit them at 494 5th Street, Southwest, right here in beautiful Vero Beach, for all your printing, shredding, and promotional item needs. As I mentioned earlier, China had to rank amongst the primary sore spot of the week. To fully grasp what's going on over there, one has to realize the size of that nation. Not only that, but what that nation means to the rest of the world. I've always said we live in the United States of global America anymore. Therefore, a nation the size of China and the way they shift from one policy to the other, not to mention the type of government that exists over there, it matters in our financial markets. Or, more to the point, your portfolio. So, when they decide on a whim to devalue their currency to benefit their exports, and then control their downward spiraling stock market by buying shares, that is always, book it, going to rattle markets worldwide. I still find that behavior unthinkable. But then I think this is China, and they're a communist country. Unthinkable from the standpoint that I had never, in 30 years of in this business, I don't ever recall a country stepping in and buying stocks to stop the fall. Well, maybe it's me. If you know of a time, please contact me on my website. But do know this. When governments control the ebbs and flows of their respective currencies and markets, you are going to have major problems in financial markets around the world, especially within those countries who adhere to allowing markets to float freely. That's why one of the tenets of the art to investing is to be cognizant of the countries your stocks are doing business in. Unfortunately, many of you found out the hard way last week how important that is. If you owned a company or a mutual fund, like many of you do, that had even just a modest exposure to China, you were hit hard last week and still haven't recovered from the week's carnage. And it may take you some time. That's why I would expect more of the same in the near future. So it might not be a bad idea to prune some of your holdings that depend on substantial amounts of their revenue from China. Now, I gave you a hint a few weeks ago when I mentioned that you should trim your holdings in Apple. That's right. A few weeks ago, I said you need to start paring down, if not outright sell Apple. Because, in my opinion, the company is becoming overly dependent on China for future growth when they don't have to. And it amazes me. Apple is a phenomenal company. And they could be even more phenomenal minus China. They don't need China. And then to top it all off, you can't trust China. So Apple is heading, in my opinion, the wrong direction. So take it for what it's worth. But you did hear it here. Sell Apple. To be sure, it wasn't only China that contributed to the week's volatility. As I mentioned earlier, commodities also played a role. Oil being the main culprit. Energy's presence is far-reaching, and chances are right now affecting every nation in the world, especially when it comes to oil. I've always said oil is the economic blood that rushes through the veins of every country in the world. You can't escape it. And the main issue with oil is supply and demand, as it is with all commodities. And the current data speaks of oil being stored to overflowing levels. And that's happening because there's not enough demand. Supply at the moment is exceeding demand for now. Now, actually, might not be a bad time to begin exploration of your own in this battered sector. Never forget commodities when you are constructing your portfolio. And how about this as an idea? This isn't even in my notes. How about maybe selling a little bit of your Apple and buying maybe a little bit of Exxon or something in that space, that energy space? Again, just a thought. Equally weighing on markets this past week is the decision as to what the Fed is going to do with interest rates. Now, I'm not going to belabor this point because it is a subject I discussed last week at length and is currently available on my website. But I will say that I still believe that the Fed will nudge short-term rates in September, if only to normalize the short end of the curve and to make certain inflationary pressures remain subdued.